we're discussing at the commodities market update segment now, but obviously the inflation that was released yesterday is up on the list, and we have
Big
introduced,
points, yeah.
Nosike Wanjide is here. Nosike, you have a lot to talk about. Were you surprised when you saw the figures yesterday?
I don't
Or
think,
shocked?
I don't think there was anyone who wasn't surprised. I think besides the MBS. I'm sure some people at the MBS were surprised themselves because it goes against, the anecdotal evidence around us. Everything we see, we feel, the prices are going up.
Yeah.
But the empirical evidence...
Because even FDC said it was going to be 18.77%.
Yeah,
that was your projection.
The headline index, we projected an increase in the food index, but right now the food index has declined by about 5 percentage points. And we're scratching our heads as to why. But if you think about it, around this time last year, at the beginning of April in 2020, that's when the lockdown started. That's when, we couldn't go about our business activities the way we wanted to. There were supply chain constraints, so prices rose. There was scarcity, and there was that increase in prices. So the year-on-year index, you measure inflation basically. That price, that's number you see, 18.12, basically measures how quickly prices have risen against last year. So if you say that inflation has declined, it's not like prices are falling. No. It's that prices have risen, but at a slower pace. So if you're measuring against a base year number that, you had in April 2020 an increase in prices, and this year you have an increase in price, it just means the increase in price this year wasn't as fast.
So are you saying that the price of bread, the price of vegetables, the price of yam today is cheaper than it was last year at this time?
No,
let's talk about the realities.
I'm saying the prices have risen, but not as quickly as they did last month or the year before. Okay. That's basically what I'm saying.
But when can we expect to feel, the impact of this?
Because if we say it's rising, but not as a fast rate as last year. But now we're buying a bottle of water that used to be 50 naira. It cost about 100 naira. Exactly. Pure water is about, I think they said it's about 20 naira now.
Yes.
Bread, a bag of rice. I was trying to buy fish the other day. Do you understand? So these are the realities.
The anecdotal evidence is that the prices of everything in the market have risen. So if it's the number you have is a general price level, the price level across the country, the basket of goods across the country. But in the urban centers, like Lagos is the largest urban center, there is that rise in price, but it's slower. It's slower than it was last month.
Okay.
The prices are increasing. That's what we're saying. And the inflation above 12% is growth retarding, according to the CBN. Inflation above 18% is really high. Well, now we have inflation going from 18.17 to 18.12. It's rising, but at a slower pace. At a slower pace.
All right.
Yes.
Okay. Now that planting season is set to start, how should we expect the commodity price movement to look like?
Planting season, okay, the biggest constraint to the planting season is insecurity. In parts of the food-growing parts of the country, there's a high insecurity. Farmers can't go to the farms, and even when you go to the farms, we don't know what it will be like in a couple of months. How much of what you've planted can you actually harvest? So when you plant, a couple of months down the line, you harvest. So that increase in output is supposed to soften prices. Prices are supposed to be tapered. But the build-up to this is that there's high insecurity. We don't know how much our farmers can actually go and plant. And even if they plant and harvest, the logistics of bringing it down to the urban centers, insecurity is a problem. Supply chain constraints are major constraints at this moment. So it's my expectations are that it would not taper prices very much in the coming months. The increase in supply, all these other factors will interplay, and prices will not move.
So is it likely to affect the next inflation rates?
Inflation down the coming months. The harvest season, taking in the planting season, by the time we get to July, August, by the time you start harvesting and you find out that what you're harvesting is not as much as you would have harvested like a year before, 2 years before, then bringing it down to the urban centers, maybe major constraints to that. So that would impact inflation figures in the coming months.
So core inflation was up, unlike the food inflation and the headline inflation, it was up. And that pressure is most significantly from the pharmaceutical products. Does this have anything to do with the pandemic, the vaccine, and?
Well, the pandemic in itself. Let me just say this before I even turn to core inflation. The food inflation, the food index, one of the reasons, or one of the major reasons why it declined, that food index declined, is that there's been border closure since September 2019, so to speak. The border has been closed. Now the borders have been reopened, and we know that food across the borders, smuggling across the border was one of the major reasons why these borders were closed. Now that these borders have been reopened, we have food being brought, not smuggled anymore, brought across the border. So even when you had to have these insecurity and supply chain constraints in the country affecting domestic commodity prices, that's been softened. So that increase in price is softened by food being brought across the border. Now, this commodities, what do you call it?
Core inflation?
Core inflation. Is it affected by things being brought across the border? Some of the products are brought across the border, like the vaccines and other commodities. Those are not brought across the border. The exchange rate has been, like I say, it's 480.
Yeah, the exchange rate is even another thing that we don't really understand at this time.
The core index is not really affected by smuggling across the border, so we expect that it will continue to trend higher.
All right.
So
all right. Looking at this, do you see this as a beginning of a continuous, downward trend for inflation rate at this point?
No. That's the short answer. The longer answer will be, we'll have to wait and see. It's possible that inflation might have reached its peak. It's possible that there's a consumer resistance to a point, aggregate demand. There's only so much you can spend. It gets to a point that prices are high, you cannot buy as much as you used to, so you cut down on demand. And that will also taper prices to an extent. So we'll wait and see if in the coming months, 1 month is not enough to form a trend. You wait 2, 3, 4 months and you see that, okay, look, the food index is on decline, even core now reverses on decline, and say, okay, look, a trend is forming. We can now say, okay, inflation has peaked and is established, a firm downward trend has been established. So we'll have to wait a couple of months to make it.
So in all of this that we're talking about, how much impact does the issue of insecurity have on these figures?
Well, the impact is major, obviously. Insecurity, like I said, stops people from going to the farms, stops people from harvesting their crops, stops people from transporting goods from point A to point B, typically rural to urban centers. And this is a major, if you cannot, at some point, I think some farmers were even having to bribe.
Yes, they had to pay to,
whatever, to allow them plant.
True, yeah.
You pay to allow you harvest. So all that cost is added to your cost. So that has pushed prices further up.
And so if these factors are not dealt with, we shouldn't really expect
prices to taper anytime soon or have a downward trend. So it's our expectations that this is just a blip, this is a one-off, and prices will trend higher in the coming months.
Except these things have been dealt with.
Except these things are dealt with.
Well, Brent crude ended the session up 75 cents. What do you think drove the price, considering the constraints with, COVID-19 resurgence in India?
I think it's positive sentiment or increased optimism, reopening of the economy in the US and the UK, particularly as we are getting into the summer driving season, and then the embargo on travel, particularly on air travel and the aviation industry. Increased demand from the aviation industry is going to prop prices up in the coming months, and even in the second half of the year, where there's a possibility that Iran, the sanctions on Iran with regards to the nuclear trade deal will be taken off. Iran has an extra 2 million barrels of oil that it is just literally waiting for the sanctions to be taken off so that it can just bring it into the market. That will have a negative effect on the market. But as it is, increased demand, especially as vaccines roll out in parts of Europe, in many developing countries, even in Nigeria, South Africa, developing countries, there's just increased optimism that prices will rise, even if U.S. shale is beginning to increase output. At the moment, the positive sentiment overrides every other sentiment in the market.
But with what's going on in the Middle East now with Israel and the Gaza Strip, will we feel any impact in the oil markets?
If any, it will be positive. It will be, how could it affect maybe Iran? How could it affect other oil producers in the market? How much output will be taken off the market? And it will have, even if it's temporary, it will prop up oil prices even further.
Okay.
So let's look at happenings in the currency market. Recently, I mean, that was late last week or over the weekend, the CBN removed the official exchange rate of 379 naira to a dollar from its website. Does this mean that the import and export rates and the NAFEX are now a unified rate?
Well, it remains to be established. At the moment, that's what market analysts take that to mean. I mean, over the years, it's been firmly established that every day you come, you open the CBN website, and you see that figure. Exactly. If you don't see that figure, I mean, it's subject to interpretation. The CBN hasn't come out to say anything, but it has in the past alluded to the fact that the NAFEX rate is now the official reference rate for all official transactions. So the market as it is going to go by what the CBN and even the Ministry of Finance has come out to say that, or even FAC allocations will be converted at that rate and shared to the states. So we'll be going by that figure.
How is this supposed to affect the manufacturers? It's been a long talk, access to Forex.
The truth is the manufacturers for the past few months, over the last year, have been using blended rates. There's this, it's rigorous getting money at the official rate or the NAFEX rate from the CBN. It's easier to just go to the parallel market. So you take some or the bulk of it from the parallel market, you take the little you can get at the official rate, and you go about your business. So that's one of the reasons why prices are up in the first place. So that the effect is that it's passed on to the consumer. Prices are higher up, and one of the reasons why the fuel subsidy issue becomes a major problem. I mean, if you're importing the official rates, I think the only people who got money, dollars at the official rate were importers, which is the NNPC themselves. So that's at 379. So now everybody's getting at 410, 412. There's an increase in the landing cost.
Is there no way of solving this problem?
Is either they absorb it or they pass it on. For how long can they continue to absorb it? We don't know. It's a question. I said Labour and the government are trying to reach some sort of agreement that would favor both sides of the party. But I don't know how that will happen. I don't know if there will be an increase in wages. At the moment, we are constrained for cash, as it were. But if you take away the subsidy, then the government can channel its funds towards maybe infrastructure and improving the ease of doing business, which will lower the cost of doing business.
I think the conversation around taking away the subsidy that gets to Nigerians is where will the money go to? How we sure?
Yes, how we sure the money
There's more pressure.
To be putting where it's promised to.
That's one side of the argument. The other side of the argument is the NNPC is saying, look, we cannot continue to foot this bill, saying that, look, we may not be able to, remittance to the FAC accounts may be down to zero. That's how bad it is.
No, states should make revenue.
We
have a lot of natural resources in the states.
Ways to make some revenue. Anyway, just before we let you go, take us through the domestic commodity price movement.
It's all in the red, really. I mean, there's nothing else. It's all in the red. Every single commodity is up. Even house rents are up. Even in the highbrow areas of Lagos, house rents are up. So what we feel around us in Lagos, particularly, I can only speak for Lagos. Prices are up. In other parts of the country, some people say that, look, if whatever we produce in the rural centers, because it's of insecurity, may be difficult transporting them to urban centers, so the price rises there may not be as high. But generally across the countries, almost I can say all commodity prices have risen.
Cross board.
That's what it is.
All right. Thank you so much, Nosike Wajide, research analyst with Financial Derivatives Company, for joining us this morning and sharing your thoughts with us.
Thank you. Always good to have you.
Yeah.